That's it. I'm answering the top 10 questions about investing in stocks. Hello there, welcome to another video on investing in the stock market. Today we're banging out 10 questions, well in fact 11, but that's because we don't care and you have to crank it up to 11. So these are going to be a mix of questions that I've just come up with myself, like questions I think it's important that you ask yourself. But most of them are going to be questions that I get asked in comments and emails and in person all the time. So we're going to start off with the most common question, which is how do I find or where do I find a good broker? Now, I have no idea, okay? But there are brokers everywhere. There are thousands of brokers, and whether you live in the US, Europe, Asia, there are several brokers you can choose from. There are national brokers, local ones. There's continental brokers and there's even international brokers. In the US, the big ones are like Fidelity, Schwab and E-Trade. But in some countries, your bank can actually also act as your broker. The broker is just the middleman between you and the stock market, okay? So the most important thing about a broker is that it's reliable. You trust them with your money, you trust them with your stocks because your broker keeps track of your stocks and they should have low fees. So that's the amount you pay every time you buy or sell a stock. Number two, how much money should I invest? In my opinion, as much as possible, as much money as you can keep away. So it should be money that you don't need for the next at least 3, 4, 5 years. So pretty much as you can every month or every year or weekly or whatever. How much can I expect to profit or lose? Now, about 2/3 of the time, so 66% of the time, the stock market goes up annually. And when it goes up, depending on where you invest in the world, it usually goes up between 7 and 10%. So that's what you can expect to make. In terms of lose, there is a low chance you'll lose money. But if you invest in an index fund and it goes down 1 year, it probably goes down less than when it goes up. So you have nothing to worry about. Maybe 6, 7%, something like that. Put it all in an index fund or pick individual stocks. Statistically, you should put all your money in an index fund, preferably a cheap index fund with a high dividend. But if you want to try picking stocks, you can put most of your money, like maybe 60%, in an index fund and then pick some safe stocks you want to bet on. And if your stocks outperform the market, you might want to look into becoming a stock picker like I am. A stock has had a good run, so it's gone up a lot. Should I still buy? Generally, yes. If you like a company or a stock, you should invest no matter what. Timing the market is very difficult and it's almost impossible to say when a stock has peaked out. Timing the market or invest consistently? Definitely invest consistently. That's statistically the right thing to do. Again, we don't have a crystal ball. We can't predict the future. Timing the market is very difficult. And in general, we say it's a loser's game. Well, it's a losing game. What should you look for in an ETF? Well, there are pretty much 3 things. The first, you want to make sure it tracks what you want to invest in. So if you want to invest in Chinese stocks, it better have stocks in China. Likewise, if you want to invest in financial, it better have most of the holdings in financial stocks. Second one is expense ratio. It should be as low as possible. Thirdly is dividend. Most ETFs pay a dividend. It should be quite high. A good dividend is like 1.5% or higher. What should you look for in an individual stock? Well, when you're looking at individual stocks, you're actually looking at businesses. The most important thing about businesses are leadership, leadership, innovation, balance sheet, brand, the history of the company, the quality of the products, etc., etc. And if you like that, you should invest. Should you focus on growth or more value and income? Probably a bit of both. You can buy some index funds for the value and income, and then you can maybe pick some growth stocks like crazy stocks like Netflix, Amazon, Tesla, Facebook, Google. if you want some more growth, because if you hit right with growth stocks, they will far outperform any index fund. I only have X amount, like I only have $1,000. What should I do with it? If you only have $1,000, you should just put it all in an index fund, preferably a cheap ETF. How to create passive income portfolio? Well, the important thing to remember about passive income is it's not income. We're just talking about dividend. There is no income in stocks. It's just dividend. And a lot of people want to create a passive income investment portfolio to actually live off investing, and they take the money they make from the dividend and pay themselves. That's generally a bad idea. If you want to create a dividend portfolio, you just buy some index funds and ETFs that pays like 2.5% dividend. And then you can pick some big blue chip companies that pays maybe even more dividend. And you should take the money you make from the dividend and put it back into the stock market. Passive income is a little bit of a misunderstood term. And I think some people want to find so much dividend that they can live off the dividend. That's not going to happen unless you're incredibly rich. And the best thing is just to put it back into the stock market. So that's 11 questions for you. If you have any more, please drop a comment. I answer all of them. Subscribe to my channel, and I'll see you in my next video.